Thank you all for coming. Now presenting, we have Yaniv Silberg with Bragg Gaming.
Everybody for thank you all for coming. Thanks for that one. I'm going to quick event for the war without shortly. I'm going to start by telling you who we are, who Bragg Gaming Group. Content driven iGaming company, global technology and content supplier to iGaming industry. We went public in 2018. Full year of 2019, with revenue, and we decide negative 10. 2023 we're projecting money from. A long way since we went public. Most of the growth comes from organic means. Talk about it, but a company that started with about 150 offices, we're over 400, 7 different offices, 140 different customers. Listed, trading on the NASDAQ and on the TSX. That we offer technology and content to the iGaming. We're operational licensed in Europe, North America, and extended. Our executive team comes from various backgrounds. A lot of these guys. Before I go into telling you what we do and essentially who we are, I want to talk about the ecosystem for online gambling. But that's really what we do. We're a B2B in the iGaming space. The online gambling ecosystem is divided really into four systems. iGaming, which is what you guys see on the screen, is table games, slots, there's iLottery and poker. We're focused on the iGaming, so slots, table games, and social account management, the platform for online casinos. Growth and success is distributed mostly by content partners. Really good relationship. Some of our operating partners. And then our content, some of our content, proprietary content, some of the biggest things. And of course, we also offer our platform and filtering provide selected countries. What I do want you to take away from this slide before I get into what Bragg does, is that we're focused on iGaming. We touch on sport betting, we have integrated into sports gaming data, but we're iGaming, and that's what we focus on everything. What do we do? Our products and services are really divided into 3 buckets. I want to say that all of these services that you see are on a rev share model, so we work on a SaaS model. All of our customers essentially are rev share operators with us, whether it's the content that we sell, the technology, or the services. That puts us not as a supplier, but rather as a partner to our operators, customers. And with that in mind, our success is their success by services. So we want to make sure that we provide their content, provide the best technology, and services. The better they do, the better we do. On the content side, we develop proprietary iGaming content, slots and table games. We have 5 proprietary and 7 studios. We'll get to talk about each one of them in the spring. We also provide exclusive games from some of our partner studios. And then finally, of course, we aggregate content from various studios all around the world, single integrated and tens of studios that deliver the content. All of that is complemented by technology. Build our own proprietary tech stack to build essentially an online casino, sitting the studio in a forum, mimic on the web, anything from player account management, wallet, money in, money out, the motivating spreaders, circulators, and of course, we build the tools to assist our customers drive more lifetime value from their customers and end users form of the business tools. Content and the tech is supplemented by services. We offer some of our customers managed operational and marketing services, business intelligence, and then of course software development for any add-on features that may be required from various customers and various businesses. I want to break down the offering to the content and then the platform and explain why it's important. Our in-house studios are supported by high-quality consumer brands on our Bragg RCS. So you'll see that we have 5 proprietary studios, suppliers, boxes, well, and then 3 proprietary studios. We have a slot lab and we can now with the various data. In addition to providing our own proprietary content, like I said, in-house, we have the power by Bragg, the partner studios that are acting on our RCS, our remote gaming server, or a copy of our remote gaming server, that is available to the some names you know from the land-based, like SEDAR and Blueberry. We take some of their land-based content, we convert it online, and there's a good tendency with online operators. And then, of course, as I said, Galaxy Gaming is incredible technology and other partners of ours to see all across North America. Our iGaming technology is the backbone of our entire system. CPU is first in-house, start making it so and marketing teams have basically been policies that we have developed and provided. Backbone of the technology is our various app engine system. You'll see that it's an omnichannel platform, how it's leading casinos and integrated into our football. As I said, we focus on the iGaming side of the sport betting platform. We have the Bragg Hub. You can think about it as a content aggregation platform that essentially is one single integration into our platform. You're able to connect to 10 of different studios, 65, 100 games, and growing displays. Our markets that have to happen. And of course, our content and our partners' content sits in our Bragg RCS. This is our own proprietary content and customers, all of that with I want to take you guys to the content first strategy because it's kind of an important subject, especially in the years on content. Content strategy varies. We develop content for the different parts of the world looking for distinction. One of the only companies, the only company that actually branded content that we sell in North America, but in Europe, we, for the most part, develop different areas factors, volatility, and so forth, because there's different disparities and essentially different players. You can also see that we don't just develop the content, release it. Content that sits in our RGS goes through a lot of AI and data analytics that we release, provides us with additional data and support so for the next release, the next game to develop. And then when we release the game, we learn from that release, different feedback, we use it to develop other thoughts and different titles for the public. Up until 2021, all of the content we were developing was either bought to third parties or partner studios, didn't have our own proprietary content. Primary content probably was very important margin. We have primary content on margin, we still have to share revenue partners. And so following an acquisition in 2021 of Webcast Gaming, we developed the in-house capability. Okay? And what you can see from this slide is that in 2022, we released 20 games from our own proprietary studios. That was 0 to 100 real quick. We also released 43 distinct titles throughout the year from our partner studios. As we continue to ramp up our development and operations, we're looking to double that capacity. And so we hired internally, we outsourced with some third parties into the art, staff, and everything else. And you can see that for H1, we already have 15 titles that are built. Of course, there's about 38 distinct titles that are just studios, which will be available both in Europe and difference in content and why proprietary content and exclusive content makes sense is because of the differentiation, and more the profitability. Two studios that we rolled out in 2 different studios, you can already see that most of our content is either powered by that content. As the studios, 2022, 30% of the gross profit margin for the executive in the Bragg studio content that was developed. And then you can see that the portion of the RCS profit went from 5 to 30 by the end of the year. The studios also resonate really well with our players. You can see the growth, notably in the Dutch market, 19% of the revenue for the primary content is at market 17%. And next question, and you can see, of course, the profitability of non-legacy markets. So, most of our business has been attributed to growing within our customers, so we sell to our customers our services. That's good. Nobody ever told me that I'm not loud enough. Sorry, guys. Our growth has been going both in terms of growing within our customers, so selling them more products and services, but also jurisdiction. We continue to grow our footprint, obviously, in Europe and North America. Our most established markets are the Dutch market and the Swiss market. The Dutch market regulated online gaming in 2021, October of 2021. Bragg represents today about 30% of the iGaming market there. It's $1.2 billion of gross gaming revenue in the market. And then we continue to extend into new frontiers, including the UK, Pennsylvania, Michigan, Connecticut. It is worth it to mention that the North American market, in terms of iGaming, is just in its infancy. Unlike sport betting that is already legal in about 30 states, iGaming is only legal in 6 states. Really, out of the 6 states, only 4 states matter: Michigan, Pennsylvania, New Jersey, and Connecticut. Delaware and West Virginia are legal, but doesn't represent anything in terms of, not enough in terms of the gross gaming revenue for the North American market. But the 4 states, I guess the 6 states in the U.S. where iGaming is legal are on track to do over $6 billion of gross gaming revenue, which is going to become the fastest regulated market iGaming market in the world. There's been some talk about extending the iGaming legislation in North America, which presents an immense opportunity for us. And I think today the numbers that I've seen last, there's only about 11 and 12% of Americans who live in states where iGaming is legal. There's been discussions in Illinois, Indiana, New York, New Hampshire, and others to legalize iGaming. And I'm sure you've all seen from sport betting, it becomes a snowball effect. Once one state legalizes, other states follow suit because, of course, taxes, but then gambling tourism. Everybody knows that there's been a lot of movement from New York to New Jersey before the sport betting legalization, with people driving down to New Jersey on Sunday to place bets. Same thing happens with iGaming. So the opportunity in the North American market is great for us to grow. But in addition to the North American market, Canada, Ontario legalized and privatized iGaming last year in April. And so all of these markets actually continue to grow our TAM, which is now at about $20 billion. We're coming off of a low base. We just need to take small single-digit percentage in every market that we operate in. We don't need to be as successful as we are in the Dutch market to make a big impact on our revenues. And as we continue to look into new horizons, we've gone live in Italy with a company called Gaming. We announced that we've gone live in Mexico with Caliente. So we have a lot of growth factors ahead of us in new markets that we're operational. Our content rollout in the U.S. has been very exciting for us, only because of the operators that we partnered with. We're executing against our strategy to grow our footprint in the U.S. As I said, it was non-existent before 2022 when we closed on the Spin acquisition. And so in 2022, we closed on the Spin acquisition and received our last the last regulator from Pennsylvania, our license to operate in Pennsylvania. And so with that in mind, we started rolling our content in the different jurisdictions. First, we gone live in New Jersey, and now we're live with Mohegan Suns, Resorts, WinBet, Rush Street Interactive. And then, of course, we grew our footprint into Pennsylvania with DraftKings, Michigan with BetMGM. You can see some of the content launches, and I mean, you see that we live in these states. You see them in some of on some of these platforms. And then, of course, as I mentioned, for us, the most important thing is the content roadmap. And so in addition to our own proprietary content that we're rolling out with these big operators, we have some of our partner studios that are rolling out into all of the market. Beauty in the North American market, especially in the United States, is that the top 6 operators account for about 80 to 85% of the market. Connecticut is a duopoly between FanDuel and DraftKings. So once you have DraftKings and FanDuel, you have them all. Unlike in Europe, when you have 10, sometimes hundreds of operators. In the U.S., the focus is on some of the big ones. Once you start rolling into the larger operators, then you kind of have most of the market under control. And then, of course, the revenue and the growth in these markets follow suit. Our content deployment in the U.S. has been expedited by getting, of course, the licenses. And you can see from this slide, our intention and our effort is to be live with about 80% of the North American operators by the end of the year. We've done quite well so far, and I think we're somewhat ahead of the curve. But we're already live with a lot of the operators with all of our content and our partners' content in a market that is estimated to be at about $6.5 billion by the end of this year. And of course, as more and more states legalize, it becomes a much larger market. Estimates have been thrown at about $20, $30, $40 billion by the end of the century, depending on which analyst you listen to. So that takes us to our financials. We talked about what we do and how we do it and why it's different. All of that is translated into numbers, and the numbers that we've done are quite remarkable, especially from the low base growth where we started when we went public on the Toronto Stock Exchange venture, which seems to have been light years ago. Our revenue for 22, so last year we reported about a month ago, was 84.7 million euros. We still report in euros because the majority of our revenue still comes from the European market. One thing I guess I forgot to mention, and it is important, especially for us, We've been operational in the European market since 2014. The European iGaming market is a lot more mature than the North American market, and we've been profitable in the European market. We essentially take profits from the European market to grow our North American operations. So in that respect, we're self-funding our North American growth, which will be a growth factor into our future. Our adjusted EBITDA for last year was 12.1 million euros, and our cash flow from operations was 5.8 million. And then I mentioned in the beginning of the presentation, and nicely told that I have 5 minutes left, so I'll leave some time for questions. But we guided for 93 to 97 million euros of revenue, 14.5 to 16.5 million guide of 2023 EBITDA, which at the midpoint represents 12% revenue growth and 28% EBITDA growth. The last thing I'm going to say is you can see about 7 sequential quarters of growth and of course profitability. This year will be a profitable year. We have a clean balance sheet with enough cash to support our operations moving forward. So with that in mind, and 4 minutes left, I'll open the floor to some questions. The Bragg Studios are studios that we have internal. They are studios that we build all the content in-house. We do the art, the math, the sound, and everything else that needs to go into a game internally. We have people that develop it, code it, front end and back end. The Powered by Bragg are partner studios where we take, depending on the partnership, either the math and the art, or just the art, or the sound and the art, or the art package, and then we build it on our RGS, where it's where then it's distributed to our distribution partners. Yep. We do capitalize. I mean, it's a better question for our CFO, but the short of the long is we do capitalize in line with other tech companies. I think that, I mean, I'll come back to them. I know we're meeting tomorrow, so I'll find out the answer for you. But the answer I have and what I know is that we capitalize in line with other tech companies. What else? Competition, they've been, a lot of them have been acquired recently, so we have less and less competition. Some of the companies that I think some of you would know, White Hat, our scale. I mean, there's obviously the competition where Light & Wonder does something very similar to what we do, but at a much larger scale. But on our scale, there's some public companies that still remain, like White Hat. There's a private company called Evermatrix. Aspired and NeoGames are one of the same. Of course, GAN on the B2B side is still a competitor of ours. And then in Europe, there's still some small names that are private companies. Yep. It's a good question. I mean, we ponder that, and I think it also depends on the state of the market and how rich some of our peers and competitors are versus how well we're doing as a standalone entity. We've done quite well. We've gone through that stage where we need to go and continue to raise money to fund our operations. So we're in a very comfortable position in terms of our growth prospects. But you never know. It's hard to say. I feel like there's other companies that have said that they'll always stay as a standalone companies and are now part of a big organization. There's some companies that said that they're going to sell. They're still in the selling process. So hard to answer. But the one thing I'll add to that is there has been a lot of consolidation in the space. A lot of the B2C guys, the large B2C guys, like to own their tech stack. And I think we have a really good tech stack, evident by the growth and the customers that we have. It wouldn't surprise me one way or another. Yeah, we continue to keep our eyes open. I mean, it's difficult for us at the valuation that we're at. I mean, we talked about the numbers that we're doing, but we never talked about our share price. We're trading at less than 1 time revenue, and it's about 4 times EBITDA. It'll be very hard for me to convince any of you, to your shareholders, that it makes sense to go and buy a company or a studio for 10 times EBITDA where I'm trading at 4, or buy someone for 3 times revenue where I'm trading at less than 1. So there's a lot of opportunities out there. We just need to be vigilant, I guess. Okay, that was good. Thanks.